The Taiwanese index, it's down 140 points.
Well, the minutes clearly show a very deep division in the MPC. Lanco Amarkantak was in the NCLT, and Adani Power bid has been declared the winner.
JP Morgan has also raised the target price in Bajaj Auto to 11,225.
Within the first take, I mean, there's a bit of a sell-off as well. The Nifty is now up only about 9 to 10 points.
Margins we are doing today, it has to enhance because, you are seeing all the downstream projects will add more value.
Things are quiet, markets are moving, the indices are moving absolutely sideways.
So it still continues with duty drawback at around 15%.
That a composite insurance license is in the process of receiving.
A very quiet Friday, you have to say, for the benchmarks.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Nigel D'Souza. And looks like another ranged trading session is coming to a close. 1 hour to go to wrap up the day and the week. But the positive bias in the markets continues, and the Nifty and the Sensex higher for the 7th day in a row. Not by a whole lot, but it's a green tick.
Well, that's right, Reema. Winning streak. All through the week, in fact, we've been building on that tally in terms of the number of sessions that we're winning. And for the final hour of trade, I think the Nifty Bank is the one that could move things around. It's virtually unmoved as of now. It's pat. If you saw it in the morning, saw it now. In fact, you'll see it's not moved at all. But the Nifty Bank is the one that's holding closer on the 51,000 odd mark. If it can get closer to on the 51,300 mark, that's closer to the 50 DMA, and that's a technical resistance zone. But otherwise, Reema, a quiet session, but plenty of winners from the broader markets.
Indeed, the Nifty once again is moving in just about a 90-point range. Europe too is not doing too much, but holding on to that positive bias. So frontline European indices are up between 0.2 to 0.3%, I guess, on the sidelines ahead of that all-important Jackson Hole meeting. And Fed Chair Jerome Powell will be speaking at 10 a.m. Eastern time. But for the Indians, if you want to tune into that speech, the time for you is 7:30 p.m. Beyond the headline index, it's Realty and IT, which is lagging. The Nifty Realty Index is down over 2%. The IT Index, with all the large cap IT names, is down nearly 1%. And on the way up, it's autos, which are revving up. It's particularly the two-wheeler auto names, and we'll discuss that in greater detail.
Well, that's right, Reema. Just a few stocks, I wanted to highlight from the broader markets that are moving around. First Source, that one's been in a world of its own. It was down lower. Now, in fact, it's spiked up. So big uptick is what we're seeing on that one. On the flip side, a few stocks have come in for profit taking. RPL Bank has been having periodic bursts. That stock has come in for some profit taking. You have, NBCC as well as now moved to the low point of the day. So some of these stocks in a world of their own. Let's see how the final 60 minutes of trade does pan out. Mitesh Thakkar is back with us. Hi, Mitesh. What do you make of today's trading session? 7 straight sessions that we're going to be ending higher in all probability if we get through the next 59 minutes. Your view on the Nifty, where are we headed? And particularly the Nifty Bank as well, quieter than what the Nifty is doing.
So, Nigel, actually, the market isn't showing that momentum for the breakout. So, Nifty has been very sideways. It's gone down a few points. It's come back again a few points. I think, as I said, the Bank Nifty needs to get past 51,100. I think once that happens, some kind of traction can come on the upside. Till then, I don't want to, really look at the index because then there's no directional or a big move happening. You're not playing for 30, 40 points here and there, and then you will not get the exact highs and lows. I don't think trading the index makes much of sense right now. So avoid it for the time being. Trade the stock-specific prices. I think that's the way we are approaching it.
Okay, so then if it's going to be about stocks, what would you recommend, Mitesh?
I have a buy on PEL with a stop at about, or Piramal Enterprises with a stop at about 1,040. For targets of 1,100. I think that's the first call. And Petronet, after a long time, is looking like it'll, give some profit booking kind of a setup. So sell here with a stop at 376 for targets of 360.
Thank you very much for that. Let's get to another important story where sources tell CNBC Awaaz that Alpha Holdings has sold its entire stake in Tata Tech in today's block deal. Yatin joins in with details on this. Yatin.
So Rima, what we gather from sources is that Alpha TC, which is a private equity firm and was a pre-IPO investor in Tata Technologies, has sold their entire shares in a block transaction today. Obviously, the block transaction happened on the exchanges in the 1,000, 10,000, 20 odd levels. And Alpha TC in the last shareholding held nearly 1.5 crore shares, but the residual 70, 80 lakh shares were sold today. And with this, I think they've cleaned out their entire investment in Tata Technologies. And remember, at a valuation of 1,000 crores, they had invested, along with TPG in Tata Technologies. And today, the market cap of the company is more than 40,000 crores. So, yes, the private equity investor making an exit in Tata Technologies in trade today.
Thank you very much for that. So Tata Tech came out with their IPO at 500 rupees. Right. So from that level, it's done very well. But it had listed at 1,200. Exactly. And after listing, I think it's not done anything. It went up to levels of 1,400. It's gone down to levels of 1,000. But it's traded very, very range-bound after listing.
Yeah, I think, but Rima, this was a bit of an overhang. So at least one of those factors are out of the way. So it appears that block trade overhang at least is out of the way. Let's see how the stock moves from here. But as Rima said, on the day of listing itself, it had a blockbuster listing. And from there on, it's been quite actually, last 3 months actually virtually unmoved even after today's pop.
And between, so both Tata Tech and KPIT Tech are ER&D players. Yeah. KPIT solely into automotive. Tata Tech gets a lot of their revenues from auto because of their anchor clients, Tata Motors and JLR. But between the two, KPIT has been showing much faster growth. And Tata Tech's revenues, I think in the current quarter had even declined. So just comparing the two, KPIT is literally stolen a march.
And KPIT, Rima, I remember various brokerage notes being cautious at 900,000, 1,200, 1,300. Now the stock is at 1,800 odd. So it appears that they seem to be doing something right. And the growth is something that they like. And they've also guided that the margins can even improve from these levels after seeing such a swift, improvement in the last few years. Dilip Bhatt from Pedigree Advisory joins us on the show. Hi, Dilip. Good afternoon and good to see you in. Dilip, what do you make of this one? Tata Tech, as Rima mentioned, when it listed, blockbuster listing, from then on it's been quiet. And between the two, Tata Tech as well as KPIT, what's your preference?
Good afternoon, Nigel. I think this entire space, if you see, Tata Technologies, KPIT, I would say to some extent Tata Elxsi and even Tata Communication. I think there are a fair amount of things which are overlapping, especially in terms of the growth areas. So I think that, having said that, I think the clarity given by KPIT gives much more confidence. But otherwise, I would say that the three Tata companies, especially Tata Elxsi and Tata Technologies, are very well placed in the niche area and continuing to capture a very good amount of market, especially in the Europe. But what I would say is, from the current levels, Tata Technology also appears to be fairly reasonably valued. I don't think that there is anything which can really drive the stock up immediately. Maybe as what I just heard you telling that a part of the overhang is removed, and rightly so. But otherwise, I would not be in a hurry to buy Tata Technologies. KPIT also, despite a good clarity given by the management and the guidance, I would still wait and watch, not be in a hurry to buy them.
Fair enough. That's the view coming in on KPIT Tech and Tata Tech. Let's move on to another important story, because shares of Reliance Infrastructure and Reliance Power, that's belonging to the Anil Dhirubhai Ambani Group, ADAG Group as we call it, have fallen 14%. And this is after the market regulator SEBI has taken punitive action against Anil Ambani and some of the key managerial personnel at Reliance Home Finance. Vivek is joining in with the details. Vivek, I believe this is the final order from SEBI, and what does it say?
Well, that's right. Like you mentioned, all shares of the ADAG group listed universe are under pressure today. There's an important development. SEBI has gone ahead and issued a directive order where they have given the findings as well as, given an order as to what exactly will be the actions taken on Anil Ambani as well as some of the associates related to RHFL. Now, Reliance Home Finance fraud case is what we're talking about. The findings of SEBI established that there has been a fraudulent scheme that was orchestrated by Anil Ambani. This scheme was administered by the KMPs of RHFL to siphon off funds from the public listed entity. The actual modus operandi was that RHFL, that is Reliance Home Finance, structured loans to credit unworthy conduits as well as onward borrowers, and these onward borrowers were actually promoter-linked entities. What actually happened was that the loans resulted in erosion of the company's finances on eventually being declared as NPAs. Remember, these loans were given as general purpose working capital loans to the lenders. Now, talking about what exactly the action being taken by SEBI, number one, they've barred RHFL as well as Anil Ambani from the capital markets. RHFL has been barred from dealing in securities market for 6 months. Anil Ambani has been barred from dealings in the securities market for a period of 5 years. Along with that, he's also been barred from associating with any listed entity as director or as a key managerial person for a period of 5 years. Anil Ambani has been barred from associating with any SEBI intermediary as well for a period of 5 years. Along with that, there has also been a monetary penalty that has been imposed on Anil Ambani and other notices.
Okay, all right. Thanks a lot for that, Vivek. Dilip, I don't know whether you want to comment on this group of companies, anything on that front, or any other idea from the broader markets that you're looking at, which you believe deserves some attention and maybe some allocation even at these levels?
Sure, Nigel. I think on a broader basis from the markets, I think DLF looks still pretty interesting. One thing which I've noted, if you have seen what is happening in the real estate, is a lot of companies have really started talking about in the real estate, talking about the pre-sales, talking about the cash flows instead about the profits. So I think especially DLF, if you see it, when they're talking about generating about a $1 billion at the group level, that means quite a bit. So I think that also gives a lot of confidence in the real estate sector, and particularly more so companies like DLF. And I think one should look at this particular sector. I think this is a sector which can really still do pretty well in the coming times over the next 2 to 3 years. So DLF looks pretty good and interesting for us. I think Calcutta Electric Supply, CSC, looks very strong in terms of the growth. And especially if you see the typical thermal and the renewable energy both, particularly the renewable energy will be something which will generate a lot of growth in the coming years. So I think we should look at this particular aspect in CSC, and CSC will certainly register strong growth in terms of top line as well as bottom line. We all know the kind of cash flows that they generate. So CSC looks pretty interesting from the current levels.
Okay, next Thursday, by the way, the 29th of August, we'll have the August series expiry and plus the 47th annual general meeting of Reliance Industries. And this is a highly anticipated, keenly watched event by all investors because periodically Mukesh Ambani has used this platform of the AGM to make big announcements. So whether it was their telecom venture, Reliance Jio, or the new energy investments, talking about a 75,000 capex. And now this time, the big question is going to be whether he will announce a timeline for the IPOs of the telecom and the retail business. This is something that investors have been waiting, shareholders have been waiting, but will he use the platform to make that announcement? 29th is the AGM. But ahead of that, we've got some, increases in target price, some bullish bets by brokerages. Dilip, come in on Reliance Industries. Bernstein today has put a target price of 3,440. CLSA has put the target price at 3,300. Do you think this time in the AGM we will hear more on the IPO plans for at least the two entities, telecom and the retail venture?
Sure, very much. I think everyone is eagerly looking forward for the IPO that is expected from both the companies, whether it's Jio or the retail venture also. And I think the valuations also will be pretty interesting to see because both have done reasonably quite well of late. And the way they have capitalized both the companies, that also gives a lot of confidence. Yes, I think Reliance Industries, maybe on a SOP basis, sum of part basis, will look pretty good and interesting in the longer run, especially as these two entities get listed and the market capitalization gets discovered and hopefully it will still go northwards.
Okay, all right. Got that, Dilip ji. Just to hold our thought, two-wheeler stocks, they're in focus. There's a brokerage note coming in from JP Morgan. Nimesh joins us to fill us in with all of those details in our special segment, Standard Brokerage Reports. Nimesh, take it away.
Hi, Nigel. Big moves on the two-wheeler names on the back of that JP Morgan note. Today, actually, JP Morgan has upgraded TVS Motors to outperform from neutral, and they've raised a target price on the stock to 3050. Interestingly, even UBS has today raised a target price on TVS Motors to 3200, and this seems to be the most aggressive in terms of target price on TVS. On Bajaj Auto, while JPM has retained the overweight stance, they've raised the target price there to 11,225. On the other side, they've downgraded Hero MotoCorp to neutral now. They have a target price of 50 to 30 there. And they maintain a cautious view on Eicher Motors with a neutral rating and a target price of close to 45.10. Now, for the two-wheeler sector, JP Morgan believes that that segment is more attractive in the entire auto basket for them. They expect and they forecast two-wheeler growth to outpace the passenger vehicle growth in the near future. Electrification, yes, it's going up, but the pace has been quite gradual, and hence they do not expect any margin pressures on the incumbent players, at least in the near term. For TVS, JP Morgan says that the market gain is quite resilient for TVS Motors, and hence they've raised the EPS estimates by 6 to 18% for FY26 and FY27. For Bajaj Auto, JP Morgan says that it's a potent combination of ability and intent. And on back of that, even for Bajaj Auto, they've raised the EPS estimates by 3 to 5%. So back of all this, a big upgrade coming in on TVS Motors, upgrade to an overweight. However, on Bajaj Auto, JPM has sharply raised the target price now to 11,225.
Thank you very much for that. Just earlier this week, TVS Motors also rolled out the new Jupiter 110cc scooter, which will replace the old model. It's priced at 73,000 rupees ex-showroom. It will be available in 4 variants, and it will compete with the likes of Honda Activa and Hero Pleasure Plus. Parikshit caught up with the CEO, K.N. Radhakrishnan, on the new launch and what TVS Motors expects from the festive season this time.
This year, the rural for the first time is ahead of urban. Okay, and we are extremely happy that the industry is doing well. This festival season, I am of the view that you will see much better growth rate than whatever the 13% what you are seeing, because the sentiments are positive. We are expecting a normal monsoon this year, and we will do much better with especially this product launch. I'm expecting much better growth than the industry. If the industry is going to grow minimum more, so far we have seen 13%. I'm expecting much better growth rate, maybe 15%.
That's TVS Motors for you. It's been a big mover, a near 40% rally since the beginning of the year. Dilip, in the two-wheeler space, do you think Ola Electric is going to challenge the hegemony of these incumbent players? Because they're fighting back. They've got deep pockets. They've got EV plans, aggressive EV plans. How do you expect the entire two-wheeler space to play out from here? And which one would be your top bet?
Sure. I think for the two-wheeler, there are two I think parts which are really making it a lot more interesting. Of course, apart from the traditional one, the second one, of course, is the EV. But coming to the regular ones, I think what we have seen in the last, except for last year, 3 to 4 years before that, we saw that the rural sales were pretty weak across for the entire two-wheeler, and we saw a very muted growth. But now I think as the things are changing out over there, I'm sure what we think is that all the 3 players, whether it's Hero Motors, whether it's Bajaj or whether it's TVS, all of them should do well. And then regarding the EV, as what you very rightly said, with the kind of money and especially the cash that they have in the books, they'll be in a much better position to introduce better products, compete very intensively. So, and of course, they will be gaining market share. So I think on all the 3 fronts, they look pretty good and interesting. Maybe I think they have run up quite a bit. Maybe I would say that Bajaj from here can go up by another 15%. TVS, I'm not so sure that I'm so very bullish on that. And Hero Motors also, if I have it, I will just hold on. I will not make a fresh commitment to that.
All right, Dilip, final question before we let you go. What about cement? You know, Orient Cement in the last few minutes has suddenly made an up move. I spoke to Ambuja Cements earlier this week, and they said that pricing, they're not very confident on pushing through, but they are focusing on the cost side measures. Your preference on the cement pack? Part of the street wants the large cap names because the large are going to get larger. But some of these candidates, possibly an Orient, possibly a Novoco, they could get taken over. So there is a valuation argument there as well. Where are you placed?
So certainly, I think what we have seen in cement over the last couple of years is that in spite and despite the fact that the GDP has done so well, the infra companies have done so well, real estate companies have done so well, we have not seen a real serious uptake in the cement demand. And consequently, also the prices have not gone anywhere. I think the cost advantage is coming to them because of the natural conditions which are prevailing. Maybe the lower petroleum prices, some of these things and the lower inflation will help them play out. But on the supply side and on the price side, they seem to be a little more stressed at the moment. So I would say that cement is something where, as what a few of these cement names which you have taken, I think there's a corporate event that may trigger some of the cement stocks. But by and large, cement as an industry, still I think one can wait and watch and not be in a hurry to buy.
Dilip, great conversation. Thank you for joining us this Friday afternoon. You have a great weekend. We need to slip into a short break. But on the other side, we'll chat with Mohit Khanna from Purnartha Investment Advisors. So stay tuned.
Welcome back. Well, let's get chatting with Mohit Khanna, fund manager at Purnartha Investment Advisors, who joins us on the show. Hi, Mohit. Good afternoon, and good to have you on the show, Mohit. Well, I wanted to understand what's your strategy, and one factor that I'm looking at is the contra call that you're taking. Everyone's bullish on financials, but you believe that, in fact, that's not a space that you're looking to load up on. And on the flip side, the chemical space, there's a debate whether or not it's bottomed out. You believe so. I think you're bullish out there. So run us through this contra call first.
Right. Good afternoon, Nigel, and good afternoon to your viewers. Yes, for financials, we are a little bit of on an underweight position. We really don't understand or like that the deposit mobilization issues that the industry has been facing has bottomed out. We think there are more legs on that. On the other hand, if we see the provisioning that has increased in the first quarter year-over-year basis, we think that provisioning is going to being set at a new normal, which is going to be at higher levels. So yes, that will be creating a little bit of NIM pressure for these guys. So, and on the other hand, on the unsecured side, RBI has been very active and pointing out issues with multiple lenders. Fintechs have taken their fair share in the lower strata of the financing. So overall, we see that the road for financials is still looking difficult over the next few quarters. On the chemical side, you have to be very selective. So yes, we are seeing some traction on the margins in a couple of companies because margins bottomed out around December. So we do like the base impact that we will see, right? The positive base impact that we will see in the chemical companies. However, in FY 25-26, there are a lot of capacities are coming on stream. So we need to be really watchful on the utilization of those capacities and the pricing. So we are purely bottoms up on that front because the sub-segments within chemicals can get really tricky and they have their own market and demand shift.
Okay, Goldman Sachs, by the way, has lowered the GDP growth forecast for India for CY24. That's the current calendar year that we're in, not fiscal year, calendar year. They've lowered the GDP forecast by 20 basis points to 6.7%. So that's below consensus expectations, which is closer to 7%. And even for next year, CY25, GDP estimates have been brought down by 20 basis points to 6.4%. Again, below what the consensus expectation is. But will this spur the Reserve Bank of India to go ahead and cut policy rates? Anyway, dissenting voices have been have gone up as the policy minutes showed. Mohit, afternoon. This is Reema here. Thanks so much for joining in. So if you could take us through what would be the way you would construct your portfolio, what would be the top bets that you have right now?
Right. Thank you, Reema. Good afternoon. So I won't go stock specific, but on the sector side, we are overweight capital goods. We continue to like pharma. We are building our positions or increasing our weights on the FMCG side. And we are absolutely in love with the two-wheelers. We are overweight over there as well. On the underweight, as Nigel discussed, we are underweight a little bit on financials. We are equal with IT.
So you're overweight capital goods, auto and pharma, and in FMCG, you're building your portfolio right now.
Yes. We continue to like FMCG.
Got it. Mohit, you also run a multi-asset fund, if I got that correct.
Right.
Could you tell us what weights are you, are you allocating to different asset classes, to equity, to debt, to commodities? What is the current mix? And have you changed it in the recent past, given the elevated valuations we have in the equity market?
Right. So I do run a Purnartha multi-asset strategy. We call it Purnartha 1. And in that, I have equity exposure somewhere around 72 to 73% as of now. We recently reduced our equity exposure from 85%. We can oscillate the equity exposure between 70 and 90%. So we are at the bottom end right now. We just got reduced that. On the debt side, we have 12 to 13% allocation as of now. Again, on debt, we can go from 10 to 25%. So again, we are a little bit lower on the debt side as well. On the gold, we are at 5%. That is the commodity bet. But we are sitting a little bit on cash. That is around 10% for us. We hope to find better opportunities, on the equity side, maybe if we do get, or the deployment in debt should increase from here on. This is little unique in the sense because in this Purnartha 1 strategy, we combine the exposure to both equity, direct equity, and mutual funds as well, both on the debt and the equity side.
Right. Mohit, just going by what you're saying on the way you have moved your debt into equity portfolios, equity is at the lower end of the range and debt is at the higher end of the range, and also you have raised some cash. So are you a little bit cautious at current reckoning on equity markets?
Yes, yes. I do see markets trading, as we can see, trading at all-time highs and even on the valuation side as well. Secondly, as Rima just pointed out, Goldman Sachs. So on the second, Goldman Sachs reducing India's GDP. So yes, we are also of the same viewpoint that the macros or the excitement over improving macros is already captured in the market. We want to tone down our expectations a little bit over here. And lastly, even if you see the sentiment side, so that is also slightly turning to be, being fully captured in the current evaluation. So all three fronts, what we follow, we do get a signal that we should be lowering our equity exposure.
You're sitting on 10% cash. You're hopeful of better opportunities to invest in on the equity side. What's the big picture? Do you anticipate a correction is coming in the market?
Well, if I could know it for real. But yes, we want to be a little bit, on a safer side. On the other hand, there are multiple bottoms-up, opportunities that are popping up in different sectors. So we want to capture those without increasing much risk in the portfolio.
Got it. Tell us about this call that you have on railways. Railways as a theme is likely to get a lot of focus, a lot of capex spend as well. But these stocks actually have got the fast train. The valuations seem out of whack. How are you approaching this theme? I think you've had some exposure out there.
Yes, so we do have exposure in railways. We continue to like this story. So if you see last few quarters or maybe a year or so, most of the railways stocks have really performed well on the order inflow news announcements. Now, if you just remove Vande Bharat from the whole picture, the majority of the other order book should get executed over 1 or 2 years. Only Vande Bharat orders are likely to go for next 4 to 5 years. So from here on, the execution becomes much more important. The execution capability will decide the stock returns from here on. Another positive factor for the railways is that the budget has been announced now, and we have seen the increase in the capital expenditure. Now, this expenditure has to be done within the next 6 to 7 months when we will have another budget coming in. So yes, the incremental orders coming in might not move the needle on the sitting order book. Execution will, start to coming into the focus, but the expenditure by the government has been squeezed into 3 quarters. Should give us some respite on that side. So we continue to like railway stocks. We continue to like stocks which have execution capabilities in railways and have a long order book or a long dated order book which gives me revenue visibility.
Where do you stand on real estate, Mohit? We've seen this entire urbanization scheme. The real estate stocks and the growth rates have been very strong for the last 3 or 4 years. So this upcycle has persisted. Now, there are some question marks that have the stocks priced in all the good news, or does the real estate cycle still have some legs to go? What is your own view on real estate? And, would you bet on the pan-India players or would you look at regional players?
Right. So while we don't have any exposure to real estate as of now, Rima, but in my sense, real estate is all about location, location, location. So I will be inclined to look at players on the regional side. Having said that, in the Purnartha one strategy, which is the multi-asset strategy, we do have exposure to REITs. And that is where we continue to like those kind of, income earning assets, wherein the lowering of interest rates will help me over a period of time. The second important aspect on that front is the GCCs, which are coming into India in big way. And that is where the REITs, I think, would stand out as a real estate investment option for investors over the next couple of years.
Got it. All right, Mohit, good to have you on the show. Thanks a lot for joining in. So we have got your contra calls, fairly positive on chemicals, underweight on financials, and the way you want to play the real estate theme as well as rather via REITs rather than play any of that. Thanks a lot for joining in. We look forward to chatting up with you in the coming weeks as well. Well, as we had that conversation, actually, the markets are flattened out. So the Nifty, from trading well in the green, well, it's flattened out a little bit. The Nifty bank has moved into the red, mildly so. Nothing really to worry about, but that seems to be the picture. So let's slip into a short break. As always, on the other side, Nimish is waiting for us. He'll tell us what's going on in D Street Chatter and our technical calls as well lined up. Welcome back. Well, any which ways you cut it, it's a quiet session, but let's find out what's going on in D Street Chatter. Nimish joins us to tell us what he's picking up. Nimish, as quiet as can be for a Friday.
Oh yes, Nigel, flat day of trade, but the way to look would be, given the weak global cues, given that our own PCR is at close to 1.4, 14, 15 stocks are in F&O band, we've not given up the gains and we are holding in the green. That's largely because of the institutional buying. Outside of blocks as well, I understand there are buy flows. So today, for a change, there is a mid-cap basket buying is what I understand at a leading FI desk. Within sectors, OMCs are well bid. So is the case with auto names. The two-wheelers I've highlighted because of the JP Morgan note. And also some select PSU banks also are well bid by larger institutions. So as I said, not a bad outcome in today's market, given the global backdrop as what we've been seeing. Technically, today's weekly close above the 24,600 is going to be very crucial, and the sense I'm getting is if that sustains, which looks like it's going to sustain, you might see further rally on the upside and further short covering as well. So net, while blocks have been pretty big, and this week saw large numbers, but even outside of blocks, the momentum in terms of buying by the larger FIs and domestic institutions continue. And for a change today, it's the mid-caps which have been well bid.
Okay, and what about in terms of individual stocks? Normally, you always start off with blocks. This is what happened today. This is what's expected next week. What do you have for us?
So let's go with what Rima said. The couple of blocks which happened today, Tata Technologies and GMR Airports. I'll start with Tata Technologies first. Stock has recovered sharply from the intraday lows after the large block. 1 crore equity got changed hands. As Yatin pointed out, it's a clean out trade from a FI investor. But the street has been talking about a big slippage. That doesn't seem to be the case, is what I understand from bankers. It's a well bid book, both from HNIs as well as from family offices. So disclosures could be quite interesting. But as Yatin pointed out, it's a clean out trade, and hence we've seen an up move in that particular name. The second stock is GMR Airports. Even there was a large block, nearly 1% equity got changed hands. I understand a domestic mutual fund was a seller, and a large long only fund was a buyer in GMR Airports today. So again, disclosures, if it happens, could be quite interesting in GMR Airports as well. The second stock is Paytm. Been in the news of late, been buzzing as well. There are large volumes in the last couple of days. HNI investors are quite active as well. But now I understand there could be a large block in Paytm very soon. The strategic investor who owns close to 9-10% could be a potential seller there. So watch out for that in days to come. The third stock is Morpen Labs. Again, small stock, but again, back in limelight of late. They did a QIP as well. Some good funds bought into it. HNIs are quite active as well in Morpen Labs of late, and hence a big move in the last few days. And the last is both the OMCs, HPCL and IOC in particular. While the stocks have been buzzing slightly, but the volumes are on the higher side, and looks like there is delivery-based buying now, which has come back in the OMC names, and specifically on IOC and HPCL.
Okay, all right. Nimesh, thanks a lot for joining and giving us that list. Well, let's get Mitesh Thakkar back into this conversation. Mitesh, 20 minutes to go for today's session, and then we're off to the weekend. But what are the stocks you have for us?
So I have STBT on Steel Authority or SAIL. Keep a stop at about levels of 133.5 and look for a target of around 127. And About India, slightly, not a very familiar name, but has been flashing for the last 1 hour on this screen. I think that's buy with a stop below 28,800 for targets of 29,750.
Thank you very much for that. We could wrap up trade in the next 20 minutes, but it's going to be an action-packed evening this Friday evening, because NSE index constituent changes could be announced later this evening. So what are the changes in the offering? Vivek is here to tell us more. Vivek.
Well, that's right. So most likely, there will be the scheduled meeting of the index maintenance subcommittee of all of the NSE indices. So you will see inclusions and exclusions across various NSE indices. The ones that we are tracking are the Nifty as well as the Nifty Bank Index, given the fact that this is where most of the passive funds will be active, and there will be flows that will come in on the back of these particular changes. So all of the changes that we are discussing are IIFL estimates. First up, when you're talking about the Nifty 50, 2 inclusions are expected. Trent is one stock that's expected to be included into the Nifty 50. On the back of that, you could see inflows of close to $422 million. The other stock is Bharat Electronics. If that makes the cut, that could see inflow of close to $400 million. Now remember, these inclusions are based on the fact that there may not be any fresh F&O additions as far as the entire F&O list of stocks are concerned. On the other hand, what will make way for these stocks to come in? You will see LTI Mindtree exiting, and there could be sell flows of almost $177 million. Divi's Laboratories could see sell flows of almost $220 million. Now coming to the Nifty Bank, you will see an inclusion of Canara Bank that could fetch inflows of close to $80 million, and Bandhan Bank could be excluded from the Nifty Banking Index, and that could see outflows of close to $40 million.
Okay, all right, Vivek, thanks a lot for joining in and giving us that list with all the expectations. Well, let's get in Hemang Jani into this conversation. Hemang, good afternoon and good to see you in. I wanted to ask you about the Sanjeev Goenka clutch of stocks. Mr. Goenka spoke to Shireen a couple of weeks or so ago, and from there, really, he's been the most valuable player. We'll just take a look at the way some of those stocks have moved. You have PCBL that's done well, Firstsource has done well, CESC as well has done fairly well, and the holding company That's the RPSG Ventures, which has the little bit of IPL. It has Mohan Bagan as well, and also holds majority stake in FirstSource. That, in fact, has done well. From this entire clutch of stocks, what do you like? I believe a couple of them have an investor conference as well that's going on. Tell us more.
Good afternoon, Nigel. Thanks for having me. Yes, what you said is right, that many of Sanjeev Goenka Group companies have done well. Essentially, what's happening is that across some of the companies, the outlook and the vision that the group has provided has been extremely encouraging. Just to give you a little bit of background about PCBL, they have said that they are looking to grow profit 5x over the next 5 years, and the kind of guidance that they have given for the existing business, Carbon Black, and the specialty chemical company, Aquafarm, is quite encouraging. So there is a massive upgrade that you are seeing in terms of earnings, and we ourselves have upgraded our price target as well as earnings forecast for next 2 years. So we are looking at about a 25% kind of a growth in PCBL. And same is the case with some of the other companies, whether it is CSE, Saregama, and a couple of other companies which are part of the.
By the way, the midcap index is selling off now. The midcap index was also flat when we began the show at 2:30. And now in a span of about 30 minutes, it's given up about 200, 250 points from the top. Pull up that midcap index, now down close to about 0.5%. You can't say that it's flatlining right now. There is a considerable fall seen in the midcap index, and the advanced decline ratio too has turned in favor of the losing side. Hemang, afternoon. Thank you for joining in. The stock which catches your attention today is Nykaa. We've had an investor who sold part of his stake in Nykaa. Now, Traditionally, whenever you had any kind of a stake sale, the markets would fear supply pressure, the stock would end in the red. But look at Nykaa today. I think the last time I checked, it was up 5-6%, and now it's extended its gain to a 7.5% rally. What's the street latching on to?
So clearly, when we see some action across the platform companies, you would see some rub-off for names like Nykaa. Also, typically when you see the lock-in period getting over and a large, entity gets out of the way, you do see the market reacting to that in a positive way, depending upon who the buyers are and how attractive the stock is. So Nykaa is probably reacting to that development, but within the entire universe, if you see, Nykaa has not been the best performing stock. I think when you look at Zomato, and some of the other platform companies, Nykaa has been a laggard. Also in terms of performance, it's not as if that they are doing anything exciting. Also, because of the way the Reliance Retail is foraying into the similar kind of a space, the overall growth for Nykaa could be a bit challenging. So it might be a tactical, 10-12% kind of an up move, but not looking at a significant re-rating for Nykaa at this point of time.
Okay, all right. Another stock that's buzzing around is Edelweiss Financial Services. Hemang, I think you tracked this counter as well. What's the view? It's now bursting away. High volume stock up 6-7%.
It's been a low-profile company for a while, but of late, we have seen some action in Nuvama, where the company has a 14% stake. So when you do a sum of parts across Nuvama, EAAA, their mutual fund business, and ARC, on a sum of part basis, the valuation that we are getting is about 117, 120 kind of a value after considering a 16% holding company discount. And as we all know that, wealth companies are getting a very, good valuation at this point of time. So there is a case for some sort of, re-rating in Edelweiss, unlocking of the value because of, this couple of deals that they are trying to exit.
Stay on, Hemang. That's the view on Edelweiss Financial. Fair value could be seen higher at 117, 120. Get into a break. Minda Corp, by the way, is also spiked up close to about 18%. Just pull up that stock as we get into this short break. And we'll also listen in to the opinion views coming in from Andrew Holland, Chief Executive Officer at Avendus Alternate Strategies, talking about his view on the interest rate cut expected in the United States, his preferred themes in the Indian market.
I think we all kind of working on the basis now that an interest rate cut in September is coming. I think they should front run the kind of interest rate cycle. I think they should do 50 basis points, albeit that our base case is 25. I think that would give the market that kind of extra fillip that the Fed is ahead of the curve this time. And I think that's the key. The market continues to worry about whether the Fed is behind the curve. Obviously, the way we think about it is that we continue to play on the themes that we think will play out over a longer period, because that's where you're going to continue to see the earnings momentum. Not just for the next 2 quarters or 3 quarters, but for the next 2 to 3 years. So again, that falls under that defense, renewables, capex spending kind of scenarios. So if the interest rate cycle is now starting to fall, it should be good for our banking sector in India if the RBI follows suit. And of course, we'll all be thinking about October at that next interest rate policy meeting. I think if you're playing this, you play the whole sector in the short term, and then see which ones have outperformed, and then do your kind of reallocation between private and PSU banks. I think the next catalyst, as I mentioned previously, will now be the awarding of more contracts. And I expect that will happen from probably kind of next month onwards to the end of the year. And I think that's going to be the next leg. My concern is always is execution, and that's maybe down the road. But we move around within the themes. Obviously, if you're feeling that some of the themes are not have taken a back seat compared to others, then you can shift across. So hospitality is probably where we're a little bit more excited at the moment. I think in terms of Ola's listing, I think we're all surprised at where the share price is. But it's obviously kind of highlighted some of the undervaluations of the other two-wheeler companies in this sector who also have exposure in the EV sectors.
Welcome back. Well, a couple of stocks are doing quite well right now. You have JTL, that stock has spiked up. It has some valuation comfort and maybe, in fact, volume pickup and EBITDA per ton as well could look pretty good from here on. It's come off the recent peak, but for the time being, it's regaining some of that lost ground. So JTL should come up for you on the screen currently at the high point of the day. Hemang, I wanted your comment. People have this debate with regard to APL Apollo as well as JTL. Anything you like from the pipe space?
Nigel, when you look at APL Apollo, for last almost about 2 or 3 quarters, their performance has not been that great, both in terms of volume growth, in terms of margins. So though we like that space, I think JTL Industries, the performance has been much better. It's a very small company, hardly about 4,200 crore kind of a market cap. But when I compare between APL, Apollo and JTL, I feel that JTL has done much better when you look at the performance, over the last 3 to 4 quarters.
Okay, all right. Let's talk about a couple of other big volume movers as well. Motherson seems to be moving higher on strong volumes. Do you have any view on this stock? Volumes are high. And as we speak, I think the stock is at the high point of the day.
Nigel, I think the numbers were pretty much in line with consensus. But I think what is driving Motherson for the last few days is that because of the kind of action that we are seeing in the two-wheeler space and the kind of offering that Motherson has, both in terms of the typical engines as well as the EV side. So there is a sense that you might see much better volume growth and margin for Motherson, and post result there is a sense that this company should do much better. So Motherson, we have a price target of about 225 rupees.
Got it. Stay with us, Hemang, for the time being. Let's get in some commentary we got earlier today. Shyam Metallics and Energy, that stock is holding up in the green after UBS initiated coverage with a buy rating. They have a target price of around 1,200 rupees a share. The brokerage says that the company is on track to report its high profit growth as well as forecast an EBITDA CAGR of around 39% over the next 3 years. Earlier today, I spoke to the company's vice chairman and managing director, Mr. Agarwal. Let's listen in to what he had to say.
In the time to come, in next 3 to 4 years, we expect that we should be able to cross more than 70-75%. And most of the investment is on the downstream side, on the value addition side, and also going backward on the cost side. Whatever margins we are doing today, it has to enhance because, you are seeing all the downstream projects will add more value forward, and the investment backward is also reducing the cost. So definitely the margin should improve around close to 4 to 5% in the time to come. Yeah, because if you see all the downstreams are not very heavy capex and it's all value add, little different. So definitely the ROC has to go up further because it's majorly on the downstream is creating more margins, and the capacity what had to be added on the upstream side has already been added, and most of the downstream, 70-80% of the raw material, we will be consuming. As Shyam Metallic is always a very investor and stakeholder friendly company, we would like to abide whatever is in the interest of the company, we would like to go on that.
Okay, got that. Hemang, do you track this one? Shyam Metallics, I recall it came out with an issue at around 300 rupees, but they timed the issue very, very well. The stock very quickly, I think, gave you 20-25% pop-up, but then it corrected, and from there it's more than doubled. At around 800 rupees, what's the view?
So, Nigel, we don't cover the stock as such, so no specific view or comment from my side.
Do you like anything? Vedanta did well, but that one as well has come in for some profit taking today. Some of these stocks actually, Nalco, Tata Steel, almost all of them from the day of that Supreme Court verdict, they got a bit of a knock, but they didn't get knocked out. And that's the point that we made here on CNBC-TV18 as well, that this was a negative, but given that they have 12 years to pay those penalties, if at all, then it's good news. How would you view this space?
So, Nigel, when that news came out, there was a knee-jerk reaction across the mining companies, maybe Tata Steel, SAIL, NMDC. But when you look at that order in detail, the actual impact is minuscule, and that too you have to pay it over a period of time. And in terms of the overall impact on the profitability, it's hardly 2 or 3%. So I think given the fact that you have a very high probability of a rate cut in US, you're seeing some stability in the base metal prices, which had corrected, last 2 weeks. So you're seeing a very smart pullback, and within the pack, what we like at this point of time is Vedanta, because you're seeing a much diversified product profile. Debt is not a major concern right now, and it is fairly attractive at this point of time.
All right. Final question, Hemang, before we let you go. We had a large trade on Tata Tech earlier. What's the view out there? When it listed, everyone was rushing in to buy, but if someone who bought on the listing day, I don't think they're making any money since then. And another one that's popped up on my list is Birlasoft. That as well is surging as we speak. It was in the red when we started off the show, but now it's moved into the green. Your view on these two?
Tata Tech has been a laggard for a while. Now that the block has happened at a relatively lower price, you might see a tactical buying opportunity. Fundamentally, don't like the space much, though they are, in the ENRD space, which is growing at a better rate. But in terms of triggers, it's lacking. So maybe 8-10% kind of a tactical opportunity given the block and the large investor has moved out. So that is my view on Tata Tech, which is the other one that you named.
Birlasoft.
So Nigel, Birlasoft, actually the numbers were not that good. The management guidance was also subdued, but we have seen a good amount of pullback across mid-cap IT companies. So I read this as a catch-up play, but within the mid-cap IT, I would go with the FSL, First Source, which has come out with much better guidance and is still at a discount to Birlasoft and KPIT.
Got it. Hemang, appreciate you joining in. Wishing you a good evening and a rocking weekend ahead as well. Thanks a lot for joining in. Well, it was a quiet day of trade today, but the market's going with some gains. So we maintained that winning streak 7 in a row. The Nifty held up in the green. The Nifty Bank, that was a relative underperformer, that ended lower in trade today. But the real action was in the broad